All right, so we have some big earnings out today. Looks mixed. I mean, Microsoft bucking higher here, AMD trading higher, Texas Instruments, which may weigh a bit on the cyclical semis, lower. Hood, I don't think that's going to have much of an influence on anybody. All right, so it looks like a mixed bag. I don't know how much of an impact it's going to have on the indices, but it's interesting because every time we get a move higher or lower, we always seem to forget, that rotation that we see from time to time, in where the market, corrects under the hood, right? And by looking at the indices, you don't know anything's taking place. You don't know anything's going on. Like right now, for example, especially with the Goldman note out recently, which makes a ton of sense, but you hear the word melt up being thrown around, and for good reason, right? The S&P 500 has pretty much been melting up, okay? But again, I love to use the term, right? You hear it a lot from me, under the hood. But if you do some digging under the hood, you'll come to realize that there's not a lot of stocks that look like this, especially if you've played the side of the crowd, meaning the consensus, and have leaned towards reopening and the more cyclical names. Okay, they look nothing like this, right? So it's important to know, again, unless you're just playing the S&P 500, and in my eyes, right, the play on the S&P 500, that egg has hatched. I'm sure a lot of you would agree with me. I'm sure there's going to be some newer traders out there who think they can milk every last drop and find an entry every day, climbing the ladder on the way up, ultimately to eventually get caught and then give it all back. But you don't want to play the game like that, right? None of us do, right? So we had our spot here. That's where, with a lot of the sentiment and positioning signals and everything else that we look at, where the risk reward was greatest, where it was favorable enough to consider an entry for a swing. And we also had, at least the early stages of this rally, if not more than that, to try to take advantage of intraday fades, possibly individual names, and stuff like that. Okay. So, unless you're just playing the overall market, my opinion here now, there's nothing here, right? And this is what we spoke about, I think it was the last webinar or two, that, everybody looks at this market black or white, meaning buy or sell. There's nothing else you can do, right? But it couldn't be, further from the truth, right? If you're looking, if this is a spot of entry, okay, and you start to move away from that entry, right? And you obviously don't have that favorable risk reward on any new entry anymore. There is an in-between where the smartest thing to do is just hold, roll, right? Sell a piece, roll a piece, whatever the strategy may be. Okay. But if you have an entry down here somewhere, it's, in my opinion, foolish, right? If you decide to sell and ruin that trade by taking another entry up here somewhere, a new entry, especially with poor risk management, meaning dollar management, money management, you're going to treat that trade just as evenly. All right, but we spoke about that. All right, so what do we do now, right? And what we were saying is, you hold and roll a position, right? Or whatever you got, you're comfortable holding, and willing to take that risk. And now, we've got to a point here now, which I'm going to show you, where it gets interesting, right? we refer to like this area here, what we're seeing, we're starting to see stop signs. Okay. We're starting, in other words, we're starting to see all the signals that lit up here that told us to look for an entry, right? Or it was a favorable risk reward entry. We're starting to see the opposite now up here. Okay. And on the tactical side, again, not if you're investing, right? And most of you aren't investing, but most of you that quote unquote trade and are more tactical, here is where you want to consider, if not taking your profits off the table, raising a stop, keeping a tighter stop on the trade, or whatever the case. The bottom line is taking some risk, being more cautious, taking some risk off the table. That's the bottom line. Okay. Because what we usually see here, and there are a couple of different things we're looking at, we usually see buyers start to show signs of exhaustion, get tired. Okay. You don't notice it all at first. You start to see it in increments, again, under the hood. Breath starts to deteriorate. Just the health of the market, right? For obvious reasons. When you come too much too quick, that has a tendency to happen. Okay. Does that mean that it's got to stop on a dime right here? No. But from my experience, in all likelihood, anything we tack on, in other words, if this market decides to ignore these stop signs, these signals, okay, and just pushes higher based on, FOMO chasing and just degenerate momentum out there, okay, that tells you a lot about what's taking place as far as sentiment and positioning is concerned. And ultimately, there will be a wash that wipes out the majority of that extra push anyway. Okay, that's usually what happens. All right. So, okay, unless you think you can time this market to a T, you want to start to at least prepare and be aware of that here. Okay. If you are already aware of it and you're not holding on to any tactical positions anymore, okay, and you're sitting in cash, you're doing the right thing. There's not much else. Just because, unfortunately, you sold your position earlier and you haven't been able to benefit off the last couple of days of further upside, doesn't mean that you go out and change the whole game plan and, just buy something just because you need something to root on, because it happens quick, and that's what those signals tell us when we start to see them after a move higher. Okay, again, it's not a crystal ball. It's not a machine where a button switches and price action starts to head south. But what it's telling us is all that sentiment support, that scramble, that chase. Okay, so in other words, everybody who puked out their long positions here and the market started to move against them, and they were forced to buy. Again, the key word is forced to buy. Okay, to get back in and put exposure on. Okay, this is where we're starting to see signs that this is where usually starts to dry up for the most part. Okay, and what we've learned, and this is, I think, the most intriguing part of this rally. What we've learned, because again, unless you're just trading the S&P 500, this is important stuff to acknowledge, because these have been the biggest winners as far as individual names under the hood. Okay, what we've learned behind this rally, this push, was that it was a scramble for exposure in the growth names, right? And that's something we've talked about, I don't know how many webinars now. Literally every single webinar up to this point, going back to at least the summer, okay, where we spoke about that these NASDAQ and especially these growth names, players, who were so bullish on them, earlier in the year, last year, off of the COVID lows, wanted nothing to do with them anymore. They literally were spitting them up. They had no exposure to these names anymore. And for some reason, again, the handicapping of it all, right? It made sense, but for some reason, everybody happened to be on the same page as far as buying economically sensitive, reopening, and cyclical names. Okay, and why that's such a big deal for anybody who's been in this game long enough would agree with me. It's almost always the total opposite. It's almost always where players love growth. They don't care about the cyclicals. They hate value stocks. They hate economically sensitive stocks. You know, they hate the Boeings and the Caterpillars. But for some reason, this go around, you know, that's where all the money went. Okay. And, you know, it wasn't as crowded, right? This is something we spoke about. This, in other words, I think Caterpillar probably says it best. Okay. So you had everybody spit up these growth names and go into all these reopening economically sensitive names here. Okay. And this basically happened. All right. And what's happened is, you know, they were stubborn. They held the right. They held their positions. They still believed in the higher interest rates and the roaring 20s and the reopening of the not only our economy, the world economy. But once they started to realize, not even realize that their thesis was wrong, but the price action was telling them they were wrong, they started to loosen up. In other words, they started selling off some of these more cyclical positions and started to dabble in tech and growth, but very methodically. Okay. And what the end result was here, okay, that cyclical value reopening trade is not as crowded as it was here. Okay. Makes sense. All right. But what also happened, okay, and this is what we were focused on, the other side of that, the growth side of that, okay, and, you know, you could even throw a Tesla in there, and I'm not just saying it because it went bananas, but, you know, Tesla is a catchy name, a growth name, you know, Tesla's more of fits that bill than any cyclical bill, right? I mean, that's obvious, okay, but what's happened is usually they make that aggressive shift when they admit they're wrong. This go around they didn't. And these names have all acted a lot better, right? You name it, from a Tesla to underbelly names. Come on. Like a U. What's going on here? Don't tell me I have Zoom problems. I swear to God, I'll kill somebody. A U, right? Or a Snow or anything like that. Okay, very quietly, these names have been filling in the right side of their charts in an uptrend. Okay, and what we started to see in this rally, okay, is a quickened, they stepped on the gas pedal a little. Okay, in other words, they picked up the pace in moving funds out of value, okay, and into growth. And like I said, they've been coming out of value, right? We've seen materials go from all in crowded position to, you know, really have come off, right? We've seen energy go from all in to literally net short. So we've seen them come out of value, but they wouldn't, what happened? Get this thing off my screen. They wouldn't step on the gas pedal as far as rotating into these growth names. And that's what I think started to change. And, you know, I'm not going to say that's the reasoning behind Tesla, right? You had news, you had a gamma squeeze, but, you know, we've been seeing this constructive price action in these names. We've been talking about these names for a while, right? Exactly. Affirm, right? We've been seeing that price action. That other one, ASAN, there's a handful of names that have been acting, crazy in a bullish manner long before the Tesla. All right. And you can see here, this is the, obviously, BOVA's weekly client flow trends, right? So it gives you an idea what clients are doing. And if you look down here, ETFs, right here. Oh. So I don't know if you can make that out, but I'll read it to you. Another growth value reversal. Clients sold value ETFs for the first time in 5 weeks, while growth ETM inflows accelerated to their highest level since June. Okay. So that's, again, it's important to know these things, because if you look at these names, right, if you look at the S&P 500 and you see this melt up, right, if you look at some of these value names, depending on the group, especially economically sensitive value names, they haven't really participated in where a lot of these growth names, have, and then some. Okay. And it's been a little more erratic because of, it hasn't been split down the middle since that positioning has been crowded, right? You remember us discussing that. So in other words, like energy, for example, okay, energy, which you had everybody and their mother long energy stocks into this, right? Everybody. When you looked at the client positioning, it was literally at the top of every house's list. And then this happened, okay? And now you look at energy, even after a move like this, and they're still net short. You understand? They haven't puked it up and got back into it. They still haven't really got back into it yet. So in certain sectors, you still have that. It's not split down the middle anymore like it was. When it's split down the middle, you have a nice and easy thesis to go off of, right? It basically, okay, it's just growth, and we can't touch any cyclical. That's not the case anymore. All right. So I just find it fascinating because it tells you a lot about what's been behind this market. And if you think about now, especially those of you who are members of the Steam Room or have access to flow and have been looking at flow over the last couple of days, look at where the most aggressive activity has been. Look at the names that have been tattooed in a sense, even, if it was earnings related. It hasn't been the reopenings, the Caterpillars, the Deeres, the Boeings, or the airlines, or the cruise lines, the travel related names, and it honestly hasn't even, recently hasn't been the banks. They performed well, right? But it hasn't been the banks. It's been mostly these growthy tech names. And not only that, right? SPACs and more speculative, Kathy type names, right? When you think of growth in this market, you think of Kathy Wood, right? And she was on an island all by herself, right? That's something else all by herself. And very quietly, a lot of those names, right? I guess it didn't do justice if you look at the ARC fund, but a lot of the names that would meet her criteria type of names that she likes, they look a lot better than that, right? They look a lot better than that. And, obviously this is based on weighted holdings in that fund. But you look at like the majority of, look at this name you guys bring up every webinar, right? Like names like this that just went absolutely apeshit, right? So long before Tesla, just Tesla gets all, all the publicity because it's a more widely held name and gets more attention. All right. So where are we now? Now we are at a point where yes, we can continue to melt up, right? If you want to go back to, prior melt up years, you could do something, like this, where you ignore stop signs, and usually you got to pay the piper, in a bigger way. If we get some sort of gut check here, doesn't have to be anything massive, just a gut check here, to keep some of these sloppy bulls off the books. It could even show up in chop. I think we have some really positive stuff out there. If we can get that tactical rinse, if we can get basically what this bull market's been notorious for is every time we need that breather, every time we need that bubble popped, right? Whether it was SPACs or meme stocks or whatever it may be, Cathy stocks, every time it needed to cool off something, it has. And that's what's kept this bull market alive. All right. So we'll see how it goes. But here's where, if you're holding on to any risk, you want to pay attention, either by, again, if it's a tactical trade, taking profit, roll out for a decent amount of time so you can survive whatever dip may show up. But the one thing you want to try to avoid is buying any name that looks like this here. All right. That's what we don't want to do, even with the risk that there could be a continued melt up from here. You need, the prudent thing to do is stay away from that FOMO entry here. And you're better off, even as ridiculous as it sounds, waiting, seeing what type of rinse we do get, and and then put the trade on, even if it's literally almost near the same spot where it is now. But you've seen what the sellers look like, So this is the good and the bad, what I'm about to show you. Okay. In other words, what stuff needs to cool off and what doesn't. So here's sector sentiment from Sentiment Trader, right? We look at this on a lot of these webinars. Okay. And into those lows, right? We spoke about that. You had a lot of things either lighting up green or getting close to lighting green. This was coming into today, what it looked like. And you could see, right? We're pretty damn close across the board now. All right. A lot of times through this market, we had a place to rotate into, which has helped. So in other words, if tech and the semis were cooked, they could roll into the financials because they've been rotating out of it. We don't have that luxury here, as you could see. All right. There's no decent risk reward as far as sector sentiment is concerned. Okay. So that's one stop sign that I'm referring to. Okay. This is basically SPX put buying. Okay. Net put delta. And what we see as a sign of risk, okay, as far as upside is concerned, is where players take off S&P 500 hedges because it's hurting their bottom line, right? And, it's been a big lifeline throughout this market that they've been using SPX options for hedging up throughout this bull run off the COVID lows. Okay. But as the rally gets longer in the tooth, you start to see that mentality where hedging is looked at as a waste of money, right? Because it's eaten into the profits. And when they feel a little more bullish than usual, they're going to take those SPX hedges off. And that opens up the window. If the market gods want to catch them, now they can catch them naked, right? With no clothes on. So that's what we have here as well into this high. Okay. At the end of the month, right? And honestly, I mentioned this today in the steam room. If we didn't have earnings season, because it's such a wild card. Like if everybody shit the bed off earnings today, you could wake up tomorrow to a decent sized gap down, right? If we didn't have earnings, there would probably be a good chance that this market would hold it together this week because you have the Fed meeting next week and you got pension fund rebalancing. Okay. And where, whether people were concerned about the Fed meeting or not, the likelihood is they would look to put on some sort of protection into the Fed meeting, right? And that put buying can create some volatility and weigh on the indices a bit. All right. So that's obviously not this week. That's next week, right? You got the Fed meeting, likely the taper. They get the ball rolling there, right? Nobody is thinking it's a big deal, but it's something different. If we were all hedged up going into it, if players were all lathered up in protection going into it, it's not a concern at all. Okay. Right now, they're not. So anything can be concerning. All right. And at the end of the month, this was from Goldman, you got that pension fund rebalancing. Okay. And a lot of times, this, you hear about it, but it really doesn't matter. You really don't see it have an impact. Okay. But again, the only time I worry about these things is when players aren't worried about these things, right? When they're not putting on hedges and protecting into events like this. All right. So you have this as a catalyst for some selling of equities. Okay. Because the equity bond ratio is off whack and they got to keep, right? These pension funds got to rebalance those accounts. And that's what we see here. Okay. So this is the stock bond ratio. All right. You sort of get it a little out of whack into this pull on the bullish side. And now, you see it get out of whack as far as upside. Okay. And you can look, back prior to even COVID lows, you would always get some sort of digestion when this thing got up there. Okay. But in a rigged market like we've had off the COVID lows, any down signal didn't work. You got to regain. But you can even see that even though you didn't get a big down move per se or a lengthy digestion, you did get some choppiness every time this ratio got a little too extended. You know what I mean? You got a little bit of chop and a little bit of rinse. So this, again, going into month end with pension funds, rebal and all that stuff might play a part. Okay. Again, I'm not talking about a crash or anything like that. I'm just talking about a breather. And that's the good that would come out of a breather. We don't get the breather. That's when you get concerned about something more. All right. Where else are we? So that with a lot of shorter term, more tactical signals that are overheated. Okay. That's the concern over the short term. The good, though, the more constructive thing out there, okay, is that the recent pullback, as shallow as it was, did a lot of good. Okay, did a lot of good. What I mean by a lot of good, it really got some fear and concern in players' heads. Okay, you had a lot of noise into this pullback, meaning there was legitimate concerns out there, right? Inflation, people worried about China, people worried about the Delta variant, and then that passed by. There were legitimate things out there for players to be concerned about. And anytime you have that, it will have a bigger impact on sentiment. Okay. And here, right, hedge funds. Okay. Again, we were worried, right? They were here at the time. They got a dip. What we were worried about is if they buy that dip a la 2018, we're in bad shape. Right? You remember us talking about that the last time we looked at it? For those of you who are members. Ooh, did I just X out chat? Hold on a second. What the hell did I do? Oh, there it is. Okay. So you guys remember we were talking about that? We were concerned, and what we were watching out for is if they decided to buy that dip and then they get caught. Okay. They didn't. And they actually used whatever strength they got early on to loosen up some of their exposure. Okay. That's a positive. All right. It's not a bullish signal in itself, like if they were net short or significantly underexposed. Okay. But, you know, that's why you have a lot of people talking about that melt up scenario. What happens if they're forced to buy? You know what I mean? What happens if they're forced to buy? So in other words, dry powder. You got dry powder on the sideline, even with this rally. I didn't put the, oh. Very similar thesis here. Asset managers, dry powder. Okay, they're not all in yet. There was something else here. Oh, and even though the Sharpies haven't really had much of an interest, Sharpies meaning the commercial hedgers, even though they haven't done much at all as far as getting long. The other side of that, which are the more speculative traders, really got rinsed out here. Okay, again, not to where, you know, even though on one of these indicators is technically a bullish signal, but in itself, I wouldn't consider it that bullish, you know, like here, right? But it's a lot better than here, right? So similar to this here, guys, right? Where it got them to puke up and it helps this bull market last longer. Ooh. By the way, am I still, somebody write in the chat room a second. Can somebody write in chat, just any letter? Oh, again, I did it. Hold on. You guys, you're not writing or you are? Oh, there you are. Got it. Thank you. No, I was the chat. I'm looking on the chat. I always click it and I go up to the top of it where I get the first comments. No, I know. And my bad, I did it again. No, that's good. That's all right. I'm not asking you to yap away. I just wanted to make sure I was broadcasting straight because I could be talking to myself sometimes. You know, I have a tendency of doing that. And I hit that. What I do is I hit the chat and it goes to when you guys first came in here and I'm all screwed up. All right. So these are some of the bullish things that are still alive. Okay. In what we don't want to change. Right. So here's what I was referring to earlier, running through stop signs. Right. If this market continues to melt up and we just continue higher, and, you know, I know myself, I'm not going to be swinging anything up there, so I'm going to be empty-handed, right? The problem is we're going to watch all this change, right? We're going to watch hedge funds chase, right? They're going to play a part in the meltdown. They're going to end up chasing. So now they're going to be fully exposed. You're going to see the riffraff specs. All of a sudden, after puking up, they're going to get back in. Right. And that's what usually leads to not necessarily market crashes, but significant, at least tops, is when they reel them all in and they catch them. You know, because again, think about all that selling that gets done on the downside when everybody's fully positioned. You know, so there's good and bad. You know, Short term, we need a breather. It's very simple. We need a little gut check. And I have faith in the market for it, because look, right? You talk about just Niners, right? And what I mean by Niners, just quickly, those of you who are new, those are the mark exhaustion signals. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9. When you get the 9, usually you see buyers start to get tired and you see some digestion. Okay. You get these things, you know what I mean? This bull market has been notorious for giving the breather when the market's needed it most, right? No matter how. Some pullbacks have been like the one we just had, a little more than others, right? Some have been just choppy, right? Or quick rinses. Well, that didn't really get to a 9, but this one did, you know? So it's the one, look at right here. You go back throughout the rally, okay, and you will see the majority of time there is at least a breather. And trust me, they're not easy to short. And looking at a chart don't do it justice, because you'll pull your hair out of your head. You know what I mean? You'll pull your hair out of your head. All right. But I don't want to, I'm going to end up blowing up Zoom, flipping back here. But if you go back and look at some of the more like 2018 and stuff like that, or 2017, it was the volatility, Volplosion. What do they nicknamed it? Volmageddon. Volmageddon, yeah. You will see like we busted through all stop signs and just melted up. You know what I mean? And just melted up. Oh, here it is. All right, like look at that. Okay. 9 and just boom into another 9. All right, through Pink Panther. Those are these here. We didn't get that yet, Pink Panther. Through these Pink Panther bars, which is signifying heat, and then it leads to that. The other thing it will do is VIX is not a problem yet, right? That's another thing we spoke about going back to before this little pullback we had. VIX is not going to play a big part in the pullback. Okay, somehow, some way, the market's going to pull. We were talking, and VIX is not going to play a part in it at all. And somehow, some way, you know, VIX hasn't played a part. Why? Because there's no offside positioning here. Players aren't significantly shorting VIX. They've been buying VIX for protection. Okay, what do you think is going to happen if we continue to melt up from here? I think it starts shorting the living shit out of VIX. And then that comes into playing a role, you know? And you can see here too, right? A little VIX pop, maybe we'll get, VIX has a 9 or 2. Downside, oh, had a 9 here. This is just overstretched. Oh, you look back, where was it? 2018, 2017, I'm talking, right? Oh, here it is. Look at this, okay? You want to see how ridiculous it was? Yeah, Dan, it's funny you mentioned that. Look, they were shorting $10 VIX, $8 VIX back here. Look. Okay? The market was melting up. VIX found the bottom, like just hovering here. Okay. And they were shorting the living daylights out of this here because the market continued melting up, thinking that VIX would roll over and die. They got caught. And this happened. You know, so we don't have this yet. We don't have this yet. You know what I mean? We don't have that to worry about yet. Amazingly. But you melt up through stop signs, you're going to get it quick, you know? So there's good and bad here. We want, and you know what's funny? It always happens this way too. You want, if you're gonna get, you don't want like the melt up to come during earnings season. You want the breather to come to earnings season. You know what I mean? Because you got earnings, the pain in the ass, and it'd be a perfect time for a little breather. And then boom, as you come out of earnings season, you're set up for, something a lot better. But the market never does what you want. The market never does what you want. Oops. Why am I doing that? Okay. All right. So anybody have any questions? And the other thing you got a lot of good things. You got seasonality, right? Obviously, that's another bullish nugget. You got a lot of good things out there. We don't want everybody positioned for those good things. It's just exactly the opposite of what we look at when we look for an entry when everyone's bearish. As long as everybody's positioned and concerned about whatever risk is out there, you don't have to worry about it. So it's the same way. It's the same thing. Here, did I show you guys this? This too was interesting. Now, again, it's not really a buy sell indicator, but it's hard to get euphoria. Oh, there it is. Is this the updated one? Yeah. It's hard to get euphoria when you have this. Now, again, I wouldn't even look at it as buy sell with the red and green lines, but just to get an idea of the atmosphere out there, right? I think I showed you members this. I didn't show it on this webinar, but this is I call it the daily noise index. This is what you hear about on CNBC and Bloomberg all day long. Okay. So when there's negativity, when you're hearing about, concerning stuff on CNBC and Bloomberg, you'll be down here somewhere. Okay. When everybody's all peachy and talking about all the good stuff in the economy, the markets and all that, you'll be up here somewhere. And look at this. That's what I was telling you guys earlier. Like, this pullback wasn't that deep. Wasn't that rough at all. A lot of damage in individual names was already done for months. But, look what it did here. Look what it did in a short amount of time. And you guys know, right? When you hear them yapping on CNBC of how bad things are, there's a pretty good chance you're near a low, right? If you're not there already, you know what I mean? And the same thing, like when I hear them all bullish doing cartwheels, I'm shitting my pants if I'm holding any longs. Yeah, right? Markets in turmoil. So you guys know what I'm talking about. So, I mean, this is just amazing that this is here right now, That's good, Matt. That's as good as anything. That's as good as anything. All right. So you get my point. Again, I want to be a bull here because I'm showing you the things that I like, but I also, I gotta be smart here, and we're at a very important point here. We're at an important point. You guys knew, I told you what I ideally wanted. I opened my mouth, the market. As soon as I open my mouth of what I want, the market never will give it to me. So I got to learn to keep my mouth shut. Call me superstitious. I'm extremely superstitious, but for good reason, I'm superstitious. Every time we talk about something, I talk about something with you guys. This is what we're rooting for here. This is what we should, this is what we want. Boom. I put the kibosh on it immediately. So what I wanted, basically what I was getting at is after this break, okay, what I wanted the gut check here. You know what I mean? I wanted the gut check here. That would have been perfect. because everything would have still been lined up. And basically any little weakness, we could have been buyers, for another entry. We could have been buyers. That would have been the ideal scenario here. Instead, what they do, they stretched it out, they stretched it out. And now they stretched it out to the point where you have some risk here of a drawdown, right? We don't have anywhere near that sentiment support anymore. We got the opposite on the tactical side. That's the problem. That's the problem. All right, so keep your eyes peeled. Like I said, if you're in something, be aware here, be smart of it. I don't, did I tell you I'm out of my SPY position? Did I tell you guys that? I think I told you that during the day. Yeah, out completely. Oh, I said I was debating it. Yeah, I'm out. Now I'm out completely. And I only had basically half. You're surprised exactly. Matt hit the nail on the head. He's surprised I held this long. Just because we were trying something different this go around, Matt. You know what I mean? Holding on to some exposure, not worrying about it, not worry about us losing money there. And it helps a lot with the FOMO on the other side of that. Exactly. Focus more on the entry. You hit the nail on that. So yeah, with that, I'm definitely worried about, or afraid this market can melt up away from me. But I'm not comfortable in the melt up anyway. You know what I mean? I'm not comfortable in the melt up anyway. Because you don't know when that music stops. It's nearly impossible to know. One of the signs is when VIX starts diverging and pushing higher with equities. That actually started today. But that could show up early. That can show up a week or two early before the markets roll over. So it's really the melt ups. I'm not like everybody thinks like a melt up is this great thing. I hate melt ups. Oh, you took the words out of my mouth, Panda. What trend? What do you mean by trend? I'm not a trend trader. If I was a trend trader, I'd be on the beach somewhere. I wouldn't be here every day talking with you degenerates. Trend trader, you're buying and you're holding. Yeah, like as far as investing, I try to keep, and that's what I try to stress to you guys. It makes life a lot easier. You got to keep the two separate. I'm talking about investing and gambling. Okay, right? We're gambling, right? I'm being straight with you guys, especially the option players. You're gambling, right? You're speculating. Like investing is one thing, right? Investing, you're not looking to time the market. You're looking for those sweet spot entries, right? And you just want to add and buy at those spots. And if you're going to hold, right? If that's your point, you're going to be patient. You don't worry about that stuff. You don't worry about that stuff. But with options, it's a whole different ball game. It's a whole different ball game, especially though you guys are playing like 2 weeks out. You can't trade trends in front month. How are you gonna do that? Dylan, honestly, no, I know, Dan. I'm not saying you. I think that's a great move, Dan. I think you're money right now with that move. I don't blame you one bit. And you might have a spot, I'm sure, if the market gets rocky, where you're going to pull the plug. I've had, I wouldn't even say more success. I've just been more comfortable where on tactical trades like this, pulling the plug when signals are flashing stop signs. Yeah, you could definitely do that. You know, what I used to do with individual names, I used to leave always a piece behind. You know what I mean? A piece of every swing trade that I took, you know, that was a strong play. But you know, listen, everybody's different. You know, I'm not here to tell you what you should do because, you know, this so nobody can tell you what everybody's wired differently. You know, everybody's wired differently. So, but for tactical swing trades, you want to try to keep your entries around those bullish signals, right? They don't have to be exacts, but around those bullish signals. And at the least, there's a number of different things you can do after the run. Okay. There's no exact science, and you're probably going to complain anyway. Okay. If this market, if something comes out of China tonight and this market gaps down bigly tomorrow, right? My method's going to look better than Dan's method. You know what I mean? There's no, guys, I've been in this game 25 years. I haven't seen anybody perfect the sell side, taking profits. Nobody. It's the toughest thing to do. Okay. The easiest thing to do is stop yourself out of a bad trade because that's on you. Very easy. On the upside, there's no answer. I'm sorry. There are different ways. There are efficient ways, but there's no secret sauce. I'm sorry to tell you, there's no secret sauce. You know, and like trend traders, I used to have this argument all the time with like trend traders. You know, like what are you using as a trend? The 200-day moving average? So you're going to wait for a break of the 200-day? That's great. That's, you know, I look at that as investing. So what are you doing in the interim, right? If you bought all the way over here and you're not selling to a break of a 200-day, then what are you doing? You know, what are we talking about? Right? That's the thing. I was talking to a guy recently who told me he's riding this uptrend to the 100-day. As long as we don't break the 100-day, that was his secret sauce. We broke the 100-day. He sold his position. We ended up rallying to new highs. He's got nothing. Now what does he do? You know what I mean? There's no secret sauce. Now he's talking to himself, Dan. He thought he had, you know, because we held the 100-day for so long. Now he's talking to himself. So, you know, that's why I wouldn't try to talk you out of your style. Trust me. Everybody has a different way. You know, we talk about like Ronchero. Ronchero has a great style of rolling, right? He's just said and done. Me, degenerate, I can't do it. I tried it. I can't do it. You know, other people tell me, oh, right against my position. I haven't wrote calls since a rookie in this business. Everybody's different. All right. The entries are, you know, something you can work on and definitely get better at. And even more importantly, managing your risk, whether it be money management or stop loss. Those are the important things. The other things you can, you know, getting out, selling for a profit, you can tinker with it. You might feel, you know, better about one than the other, but a lot has to do with how's it look, you know, for recent trades. All right, so that's the story. What you keep thinking he's got to bring up my SE trade every day, this Dan, every day. Oh yeah, well, I got a list. You know what it is? I need to, what I want to do is invest more. But when you get, I'm an old man now, you know what I mean? I'm investing for my daughter. By the time I see reap the fruits from my investments, I'll be in the dirt. So now I buy interesting names for the long haul. I put them in my daughter's account. I leave them alone. A hit list. You guys know the names I like. You know, the problem is the earnings got in the middle is going to get in the way of a lot of these things. you know, MQ, like these names, you guys know the names I like. This is the names we've been talking about for several weeks now, you know, the group. That's what gets me excited. That's what I've been excited about. Here now, you have a lot of these things have moved and you have earnings. And I think that's the problem. So again, what you're hoping for is you're hoping for a little breather and look for flow in all these names. Yeah, Vimeo, you know, that was another interesting name. Just an interesting name that caught action, a decent amount of action too. So I think, Matt, I think all of these, as you know, I think they're all must watch off earnings. Because I'll tell you what, Matt, there may be selling off earnings because some of them have had nice runs, but I think they'll buy the weakness there. I really do. I think they're going to buy the weakness there. You know, it's amazing to me. It doesn't feel that way. Like you look at sectors right now and everything's like hot. It feels like they can rotate into cyclicals here, some of the cyclicals. But you know, as far as the sentiment side is concerned, it's not really that appealing. That's kind of the problem. D-Dog, what a beast that stock is. Like, you know, Jesus Christ. Yeah, that's another name, right? Like I could see it selling off on earnings, off good numbers, just because look at it. But like somebody just mentioned, Matt just mentioned, that's an opportunity if you like the name. You know what I mean? Right? But yeah, I like all these names, not even necessarily software that's been unconscious. Oh my God. I just like, every time we pull this stock up, right, I'm oh my Godding every time. Yeah, this could easily take a breather. Take two, these gaming stocks, just wow. See, this thing snuck up quick, huh? ATVI still has headaches. Probably a buy ATVI, right? When do they report? Yeah, they got hit off the China headlines and ATVI had even bigger headaches. When do they report? See, these two, right? These are definitely worth a watch off earnings. And I like all the, I bought a little equity in E2, but not for a trade. I'm going to try to hold on to it as long as possible. You know, I think it's possibly a trade here and, you know, in the long run, maybe something bigger than that. But I'm interested in the bigger than that. And I'll be honest with you, I keep forgetting what you told me these guys do. I don't even remember. I think it might be a SPAC play you told me. The flow that we've seen, the longer term flow. And I don't know if you saw Panda. Did you see the CEO, what he bought? I don't know if you see me post that. Yeah, the insider buying, the CEO bought a shitload. Oh, all right. So it's here. Yeah, somebody said supply chain, right? I don't know what that means. So it's software, Europe, Asia, company software, orchestrate supply chains, realize value and return. Guys, I'm tech illiterate, so I don't know what that means. I don't know what that means. But yeah, the CEO bought a nice chunk of the stock. Is the game in here? Logistics. Yeah, again, the reason I'm buying it, you guys, we've spoken about this name before, right? Remember, this thing caught a decent amount of action over here. I missed it. Okay, I didn't know what the hell it was, a SPAC, whatever. And then it came back down for whatever reason. But there's been some nice longer term positioning in this name. So, you know, there's been flow recently. And then, like I said, the CEO is the cherry on top. Yeah, so maybe, you know, fits the bill here perfect. I spoke a little bit about the Gamma Gang, though. Basically, you know, what we look at through the Gamma Gang, what in other words, our takeaway is a lot of times off their stuff, is this. Okay. And this purple line here is SPX positioning. Okay. The lower the number, closer to zero, that means less amount of put buying. Okay. So it's a sentiment indicator. So what this tells us here is that players took off their S&P 500 hedges. Okay. So simply put, if the market wants to catch people, like I said earlier, naked with no protection on, right? And SPX, they got them. Okay. And I don't know, Johnny, if you were around, over here before the pull, that's what raised caution flags here too. Okay. You see, this got almost to zero here and basically confirmed that players took off SPX hedges. And then whoop. So that's the main takeaway. Fits, like I said, it fits in with everything else we're seeing here. Yeah, positioning, it depends on the positioning. Positioning is more big picture stuff, for the most part. So positioning is like more backdrop stuff. So like, a lot of the stuff we look at on the flow side, the sentiment side is more tactical, short term. And then, positions like that added kicker, that added kicker. Because like, I give you an example, Dan, like this, and I told you guys, when we were there, this for obvious reason, because the market has been so strong and we haven't had a correction. But even though we had bullish sentiment signals here, okay, positioning wasn't lined up the same way. If it was, you know what I mean? If you had some of that bigger picture positioning there, you would have had one of those sweet spot entries, that nails bottoms. Positioning nails bottoms, nails bottoms. Again, for the most part, like what we look at through the Gamma Gang, SPX positioning is short-termish, so that's not like big picture, but for the most part, Sharpies and stuff like that. The other thing that I showed you guys, I showed you guys the fund flow, but I wanted to show you guys the other thing there. Hold on. Gotta keep going. Hold on. Oh. So look here. This is what I look at this. I don't like looking at this shit when you have short-term caution signals because you get more bullish. And institutions dump too. You see that? Look, here's institutions. Here's hedge funds. It says hedge funds were the biggest net sellers. All the buying, if anybody was in ETFs, all individual names, sectors, I mean, out the window. So, like this stuff, like Dan, you don't get signals enough here. People lose interest when you're not obsessed with this crap like I am. You lose interest in it because there's not always a takeaway. There's not always a takeaway. Yeah, here's the thing, okay? Because a lot of people throw out certain lingo and then they leave out the part that didn't work out the way they were saying it was, and then they talk about the part that were. Tom Lee's a perma bull. I love him. I love all perma bulls. Okay. But I'm not knocking him. No, I'm by no means. Everybody is right and wrong different times. But he's been talking about the reopening trade, right? And now you don't even hear it. He was talking about the travel names, the airline names. He was talking about, what do you call them? The epicenter names. Remember? Okay. And now he's very, quietly has left that out. You don't even hear it that much. He still talks epicenter, but now he's talking about energy being epicenter names, But I give him credit. The energy trade, he nailed. He nailed it. Hell yeah, he nailed it. He nailed it. Yeah, Kalanovic had a note. Kalanovic has stuck to his guns. He likes, I guess, inflationary type plays, commodities, energy. All that stuff. Oh, the equity clock, let's see. Where are we? Here, right? Yep. Unbelievable. Yeah, it looks good then. Seasonality, no doubt, looks good here. Even that the Goldman analog looks great. Gartman said to buy TLT. Yeah, I saw that. He likes bonds. So he thinks rates are going lower, which is interesting. I don't know. Like, as far as the crowding there, I don't know anymore. It's nowhere near as crowded. Like, remember, we spent so much time on it. Everybody was positioned for higher rates. I would still say the majority of people still think rates are going higher, but it's definitely teetered off. Gartman definitely, that's legitimate. He's right. Gartman called TLT 100%. It was, I read the thing 2 days ago, I think it was. Yeah. But you got to be careful with him because he changes his tune too, He changes his tune a lot. I tell you, you guys don't know, Gartman was a legend. Even before my day, before I even got into the game. His word was gospel. In real terms, right, in yen terms, his newsletter was the Bible. But he got such a big following, and that's what happens in this game. Yeah, Gartman was, Cal, I can't even explain to you how legit he was. Like, he was the biggest thing, especially for like commodities and currencies. Yeah, he had a great run. And then, like everything else in this game, when you become popular, you're out now in the media talking about your calls. The market gods, they don't like that. That's why I was talking to a couple of you guys, Trey, I don't know if you're still there, about like sharing a position that you're holding that you own a lot of or something. I hate that. I hate doing that. I'm so superstitious. The more people know what you own, the more shit, the greater the shot that thing's a loser. Yeah, TLT had a nice bet today. Yeah, like guys like that, exactly. Like Barry, right? He comes down, pounding the table. Sometimes those guys are right once, making a call, and then all the riffraff flock to them, and then they bury them. Do you guys remember, like, I don't know, I'm sure my age, Robert Prechter with Elliott Waves? You guys remember him? What a frenzy he had around him. You would have thought Elliott Waves were a crystal ball. Like, he got hot. He was calling every move. to a T. You know, even DeMarc. Even DeMarc. Yeah, of course. Listen, everybody, anybody you speak to in there and they're honest about it, when you get to that, when you get that popular, why wouldn't you want to make more? You're making more money off that than you would be trading with less stress. Moon phases. It's funny. Nobody used that when they were around me. I think I actually, from a couple in the steam room, you guys told me about it. The moon phase thing, I never took. Yeah, Dan, you know what I mean? It's a business. It's not trading. Well, I don't know those guys. I don't know. A lot of those guys on Twitter, I don't know. You know what it is? It's like my experience when you're trying, like you try to learn certain things off a trader, you're not looking for stock picks off a trader. It doesn't make sense, right? A trader, like from my experience, traders, the reason why they're successful off their instincts, the way they're wired. You can't teach that. So my opinion, if you're looking towards any of these guys, Gartman, or you're looking to be introduced to something that maybe you can incorporate into what you're doing. As far as mimicking what they do, it doesn't work. It doesn't work. Because if any of them were honest and they were like great traders, right, which there's not a lot of great traders, they would tell you, like, listen, there's no point in telling you what I'm buying, because I may be out of it 2 seconds from now if I see something I don't like. Most of these guys on Twitter, they give out a pick and then they're pumping the pick for the next 3 months, telling you all of a sudden magically after they recommended it, all this good news is coming out, Yeah, and the guys who are successful, right, they create amazing liquidity for themselves. Those are the guys who are successful doing it. It's this game. If you like this game, especially, you want to learn things from others. Some stuff is going to be useless and you're never going to, it's going to do nothing for you. But the one or two things that you may stumble across, may open your eyes to something that you didn't even know existed and fits well with what you're doing. That's the beauty of this game. You can learn from others. You can't mimic them. Oh, well, this weather. Jesus Christ, Jim. We got a little baby monsoon down here. Have a great night, Jim. Stay safe. We got a little baby hurricane over here. I'm going to wrap things up here anyway. I got to grab my daughter and get the hell out of here. But talk about, the anti-VIX. Here's the problem with the anti-VIX. You got the VIX. Let's say this continues here, right? Where you're getting the moves in Tesla, and then now it starts to pour into other small cap or Reddit names and all that. If you remember the time the Reddit names were running with Tesla the last time, I think it was, GameStop, VIX goes up with the market, with equity prices. Okay, the total opposite. And the reason is it's based off all the options activity, the call buying that's going on. So, we look at the anti-VIX, it's measuring the VIX, right? It has nothing to do with the S&P 500 or the market. we're using it for sentiment purposes, right? And the reason why we use it for sentiment purposes, usually, most of the time, when players are aggressively buying exposure in the VIX, they're nervous. Okay, and when they're selling VIX, they're bullish. They're extremely bullish. These are the rare times today, for example, where you had the VIX pushing higher based off what was going on in Tesla, right? And the equity price is moving higher with it. The anti-VIX measures aggressive buying and selling in VIX. So that's what I was trying to stress to you guys today, because I don't know if it was technically a bullish, you had like a bullish signal on the anti-VIX, which ended up lining up well. I think it might have nailed the lows, to be honest, at that point. But I think it just worked out that way. You know, if we're using VIX for sentiment purposes, that's why it's a signal. It wasn't really telling us anything about the signal we use it for, if that makes any sense. Right. We want, when we're looking at the anti-VIX as a signal, we want it to tell us that players are nervous, and that's why they're buying VIX. You know? And that obviously wasn't the case today. Yeah, that's usually a bear sign, Cal, because it's based off, again, I don't want to pretend I know the logistics of it, but it's based off all the call activity that's going on in some of these names, like a Tesla. You know, like you see the action. By the way, we didn't even talk about that. The call activity in Tesla yesterday and this morning. I mean, insanity. Insanity. I don't know what the hell goes on. I don't know who the hell's behind that. They ran out of strikes. Are you serious? I mean, insane. Yeah, and that's what happens, guys, with these gamma squeezes and all. That's what happens. You see these things start to get crazy. All of a sudden, you start to see these $1 million, $2 million, $3 million sweeps out of the money show up in the name. They get the market makers to react, and you create a frenzy. Wow, Matt, that's nuts. Yeah, right. $1,800 calls. They were insane, insane. You know, that's what they did in GameStop and all that stuff then too. So if you remember, VIX went higher then too. And, you know, usually when you see it reacting with stocks getting out of control like that, a lot of times it's the first sign of be careful. You know, be careful when you have VIX. And the other thing too, sometimes VIX doesn't even have to go up. It just stops going down. You know what I mean? When the market continues to scream higher. So, but yeah, going back to the question Hussein was asking, you know, even though it's technically a bullish signal on the indicator, it's not telling us what it usually would tell us. So I just wanted to, make sure you guys were aware of that. You know, just aware of it. And you'll see the put the calls too usually react off of when the anti-VIX is at bull signal. Yeah, this thing's still, they curl today, but they're buried. They did bounce today though. But this is not even that bad. The put the calls aren't even that bad. They could get worse. So, yep, I'm about out of voice anyhow now. I'm going to wrap it up. All right. Always a pleasure, guys. Okay. So keep a close eye on it here. Hopefully we get a little breather, but there's some bullish backdrop out there. So we haven't ruined it yet. Yep. Enjoy. Good luck on your earnings bets, you degenerates. I'll talk to you later.